So I'm going to take you through Bitcoin versus crypto. So technically, yes, Bitcoin is a cryptocurrency, but this really does confuse people because actually Bitcoin is unique from the rest. And so this is why you'll hear people say it's Bitcoin, not crypto. Okay? You can categorize crypto into two, one being crypto commodities, where you have Bitcoin, Bitcoin Cash, Litecoin, Monero, Zcash, Dogecoin, and then crypto securities. And the popular ones would be Ethereum, Solana, Binance, XRP, Avalanche, Cardano. Let's focus on the crypto commodities part. Why is Bitcoin different from the rest of the crypto commodities? So Bitcoin has pretty much all of the computational power directed at it, 99% of it, in fact. It also has 82% of all the electrical power being directed towards Bitcoin, which is interesting because it just shows you how inefficient the other digital monies are, in that they are taking up a lot of energy, but they actually haven't got that much hash rate. And it has all the monetary power as well, 96% of the monetary power. So 96% of the market cap of all of these crypto commodities is within Bitcoin. So Bitcoin is the dominant and the winning crypto commodity. Crypto securities, they're quite different. So they have a different consensus mechanism. They typically have a proof of stake model or something like that. And they're not connected to energy. They're not using proof of work as their consensus model, their security model. But more importantly, they are more equivalent to, say, a stock of a company. That's what a security is or means. It's like Apple stock is a security. Okay, and you know what a security is by ticking off a few of these items in the Howey test. So we can compare the two, crypto commodities versus crypto securities. Crypto securities began with an investment of money. So effectively, an entity or group of people raised money from venture capitalists or investors in order to build out the project. Crypto commodities didn't. They were just launched. There was no money involved, fundraising at all. It's just the launch, and then the project took off. There's an expectation of profits. So there's no expectation of profits with crypto commodities on any counterparty, but there is with crypto securities. You're expecting that some entity will create some sort of profit, or when you're buying into the token, you're going to be making a profit off that token, in particular because there is a common enterprise that you're relying on to do the work, to do the marketing, to do the investing in R&D, and also, so therefore, you're relying on the efforts of others. And this is a good example of this was when Ethereum moved from proof of work to proof of stake. It required developers, you trust in these developers who are funded by the Ethereum Foundation to move the protocol from one consensus mechanism to another. So that was an investment of money with the expectation of profits from a common enterprise and relying on the efforts of others. You don't necessarily need to take my word for it. The SEC is going after a lot of these tokens. They've gone after Binance, they've gone after the XRP, they'll probably will eventually go after Solana, and it looks like they're going after Ethereum as we speak. I also get this a lot, and people think that Bitcoin, because it's the first one, it'll be replaced by another one. Bitcoin is not just the first one, it's the first one that's worked. It's the first digital money that's sufficiently decentralized that has actually been successful. There's been many years, decades of development to try to achieve this feat, and there's been almost about 10 different attempts to try and build out a digital money. But they've all failed, and they've all failed largely because they had a centralization risk. They were centralized, and that allowed governments to either shut it down or hackers to corrupt the network. This is the thing about this kind of digital money. It's either a 1 or a 0. It's either going to be worth a lot of money or it's going to be worth nothing at all. It cannot be It's unlikely to be somewhere in the middle. And so this is what we're seeing play out with Bitcoin. This is a fun piece of data. So here we have Bitcoin versus crypto investments. And the Bitcoin here is this bright yellow, and crypto is this sort of dark green. In terms of deal count, venture capital deal count, Bitcoin investment makes up approximately 2%, whereas venture capitalists have been loving deals in crypto, just throwing money at crypto. And then less than 2% is actual dollars invested in the Bitcoin ecosystem. And so the majority of cash is going into these crypto projects. The venture capitalists are pumping money into the security, the crypto securities. And yet, still, Bitcoin is the most dominant crypto commodity, crypto asset out of any of them. So, well, here it's 42%, but now if you check the market dominance, it's above 50%. So all that money, we're talking about tens of billions of dollars gone into crypto, and yet nothing has really been achieved. No one's produced anything of any real substance apart from some stable coins, and Bitcoin remains the most trusted platform. So where are the venture capitalists? It seems to me that venture capitalists only understand the application layer of anything, like of the internet, of what's going to be these crypto protocols. They can only understand the application layer, but to understand Bitcoin, you have to understand the infrastructure layer. And this is what the VCs and many people overlook. So Bitcoin, in a nutshell, is separate to crypto, in that it is the dominant crypto commodity, but it's also not a crypto security.